Nirmal Jain, chairman of IIFL, joins us. He's also joining us ahead of the IIFL India Investment Forum. The conference begins today in New York. Today morning in New York, it'll be evening for us. Nirmal, thank you very much for joining us.
Thank you.
Before we get to the highlights of the conference itself, which are very eager to hear about, what is the sense you're getting about the markets? Have you really seen the best growth for the year, and now you might see the markets pause a bit?
Markets have rallied very strongly in last few months. And in fact, in last few weeks, even mid-caps rallied quite well. So it's but natural that market will look for regions to correct, and whenever, and particularly mid-cap and small cap, you'll see that corrections are very sharp and very swift. So that is what we saw yesterday. So the trigger was, of course, Syria and the concerns about China. But the fact of the matter is that we are in a bull market. But there will be intermittent corrections which are very steep, and investors have to have appetite for volatility, and particularly in mid-cap and small cap. So I'm not very concerned about the correction. In fact, it's healthy. The trigger can be anything, but we need a corrective phase in the market, and market needs to consolidate before it resumes its upward journey again.
Okay. Nirmal, hi, good morning. The agenda of your conference looks very interesting, especially some keynote addresses. One is the oil and gas industry in India, the past and future trends. It comes at a time when, we're expecting some decision on the gas pricing issue, perhaps later today. What's the sense you're getting about this sector and how you should approach some of these companies like ONGC, Oil India, Reliance, etc., ahead of this news flow?
I have a feeling that government will take the middle path, because they also don't want to burden power and fertilizer companies as well as and therefore the ultimate consumer with very high prices. And at the same time, prices have to be remunerative enough for E&P companies to continue with more exploration activities as well. So I think they will take the middle path. I don't know what the price will be. It can be somewhere between $4 and $8 as it has been widely speculated. But more important is that if there's a firm and decisive action on that, and the uncertainty is behind us, that will be good for the companies, because they can plan. They at least have the new pricing regime in place, and based on that, they can plan their activities. So I think it's good that is happening. I mean, government took 3 months, but they're sticking to their timeline, and hopefully before 30th September, they'll announce the new pricing. And that should basically, sort of pacify, this should resolve all the issues with the producers as well as consumers.
Okay. Nirmal, in the run-up to this conference, you must have touched base already with a lot of the big guests whom you have invited there. Are you getting a sense that people are continuing to hope that this is a huge growth market, or is there some trimming of that May, June enthusiasm on grounds that the government could have moved a little faster?
I think, as government ministers meet, and in fact, Prime Minister is reaching there on Friday, I think, and mood is very upbeat. In fact, all the events of Prime Minister are seeing overwhelming response. The NRIs and HNI investors there are also very enthused. So I think investing community, which is HNI as well, NRIs, as well as foreign investors, are very enthused. So not that every day market has to go up for that. They are planning for that. There are a number of India-specific, India-dedicated funds that are being planned. So I think, and whenever, what is happening with this government is that, and at least this is what ministers are telling investors, or when they meet people in a smaller forum, that we don't want to brief media on each and every activity, which is contrast to, say, the earlier government. And therefore, media doesn't get the advance notice of what is happening. But there's a lot of work happening inside, and decisive actions will come out, and they have been coming out also. So I think, I don't think there's much worry that government is going too slow. It's important in a democratic country with a very active judiciary that you go with your homework done properly, and not that you try and announce things in a hurry and just to boomerang. So I think things are moving in the right direction. If there's one day of correction, people start questioning whether the government is moving too slow. If again there's a rally in the market, then people say, we are back into the Modi era. But I think on balance, we are in a bull market where there will be corrective phases. Foreign investors on the whole seem to be very enthused. And I think more or less story is intact as we've been seeing it for the last few months.
Actually, tomorrow we have that Make in India launch that's taking place, so all eyes will be on that. On that context, we actually have a query that's posted on our Money Control message board. It is on Bajaj Auto. Sameer writes into us from Chandigarh, and he wants to know the immediate target for a stock like Bajaj Auto. But, you know, just to widen that discussion a little bit, how would you move on some of these names like Bajaj Auto, Hero Moto, etc., considering that there's so much talk of this manufacturing theme picking up now?
I think Bajaj Auto is a good stock, and two-wheeler sector also has been seeing uptrend. I mean, there is demand growth has come back, and in fact, if I'm mistaken, not Bajaj Auto, Rajiv Bajaj or after previous quarter's result was very certain that they will increase their market share. But leave that aside, it's a good company in the sector, and the sector is doing well. But I can't have any view on the immediate price target because I'm not a technical analyst. But if you want to hold it for 3 to 5 years, it's a good proxy on India's growth and also the rural growth, because two-wheeler story there is really gathering momentum.
Okay. Well, Nirmal, just a word, we have to pause and look at the mid-cap index. There has been a sudden fall in that index. It's down 0.8 at this point in time, almost heading to a 1% cut. So, you know, don't take your eyes off that either. I mean, you can't say you weren't warned. Speaker after speaker here, Anuj, Varinder, me and Sonia, all of us have been speaking about the vulnerabilities in this space, especially as we head towards expiry. And look at that fall that has come in that index. The advanced declines have suddenly gone so wonky. They were neck and neck up until probably 10 minutes back. But now, clearly, it is 2 stocks in the red for 1 stock in the green. And no doubts about the kinds of stocks which we told you you should watch out for and beware of. RS Software down 6%, PC Jewelers down 5%, IG Petro down 5%, Alembic down 5%, Suzlon Energy, of course, it's been on a downtrend, India Bulls Power 5%. All those stocks which saw an accumulation of positions in the last 2 weeks are clearly more vulnerable, and we pointed all these out to you. So beware is all we can say at this point in time.
Even some of the good quality mid-cap names like Bharat Forge, etc., that stock is now down 6%.
Absolutely, Ahmednagar Forging. Even the good ones are taking it in the neck. You first take profit from where you are dicey, and then you take profit from where you know the stocks are healthy as well. Nirmal, on that note, what are your favorite spaces or stocks in the mid caps where you know, even with all these intermittent minor near-term vicissitudes, you will continue to stay a buyer?
I think there are quite a few mid-cap names that are good, including stocks like Bharat Forge, which may be down today. But you know, anybody who is investing in mid-cap should have a little longer-term perspective. You should invest in mid-cap by, you know, at least with a 3-year perspective, and not try to time the market. Mid-cap by nature will be very volatile because liquidity in most of the stocks is not very good. A small quantum of selling can bring the stock down very sharply, and also other way around. So a few days back, we were seeing that most of the mid-cap stocks were up 5, 10, 20% also, depending on what the circuit is. Having said this, I think if you were to pick up stocks, we should try and look for good names in cement sector, because that is one sector that's doing well. Auto ancillary, that is one sector that I think will continue to do well. And other than these, one can be bottom-up stock picking in even sectors like chemicals or pharmaceuticals. And we actually had a corporate day yesterday where we organized mutual fund and HNI investors meeting with 10 mid-cap companies, and that had a very good response. I think there's interest. Another important feature of this market is that after a long time we are seeing a net positive equity inflow in local mutual funds who are typically investors in mid-caps. I think at every correction, one should look at good names to invest and you know, build up a portfolio with at least 3-year perspective. Don't look at investing in mid-cap and making money in 1 month, 2 months or 3 months. You may be lucky, but that should not be the game.
That is actually much needed advice at this point, because the market is starting to fall considerably now. Sensex is down 120 points, and Nifty is down almost 0.5%, and big losses in names like BHEL, PNB, L&T, etc. Nirmal, if this corrective phase in the market continues and stretches out, then what could the extent of the downside be? Could it be restricted to 5 to 10%? Or do you think that given the run-up, we could be in for you know, a longer ride on the downside?
I would be surprised if it is beyond 5 to 10%. So I think 5 to 10% is something that one should be prepared, say, in the index, and that would mean that in the mid cap it can be 10 to 20%. So mid cap will always will have a higher beta and move either way faster than the broader indices. So I think 5 to 10% you can look at in the market indices, and 10 to 15% in mid cap is what one should be prepared for.
What are your favorite stocks in the Sensex or the Nifty, Nirmal, at this point in time, if you're playing a 1 or 2 year game?
No, one should look at a basket of stocks rather than just 1 or 2 stocks. So I like even stock like BPCL, which is very efficient, PSU, or Bharat Electronics, which is a defense play. Then cement companies, pharmaceutical companies like Dr. Reddy. So I think there's a whole lot of and IT companies like HCL or Tech Mahindra. So one should have a portfolio approach in this market, because already the major run-up has happened, and now you look at good returns, but not those extraordinary doubling of money in a month or two. So you should build a portfolio and look at good quality stocks.
All right, Nirmal, on that note, we'll let you go. You guys have a great conference. I know you're not going to New York, but
Thank you so much.
have a great conference nevertheless, and we'll see you again post that.